If you could ask the attendees to move up towards the front of the room so that they can hear clearly, but then we can hear their questions more clearly, speaking into the microphones that are on the table there. That would be very helpful. And while we're waiting, it might be nice just very, very quickly if each of the attendees in person there at the Foreign Trade Zone could tell us in 15, 20 seconds what their business is and what they're trying to export. That could be very helpful for us.
That's excellent. Shall we go ahead and start that process now?
Yeah, please go ahead.
Terrific. Would anyone like to volunteer to start out, kick us off? Maybe I'll start out and just introduce myself. I'm Neil Rath, and I'm part of the Hawaii Pacific Export Council. I'm the treasurer of our organization, and I've been with HPEC since 2019. And I'm also a member of the executive committee that works very closely with Rob and with our partners at DBEDT to can develop our programming on an annual basis and make sure that we're including all of the most prominent, highest relevance and importance topics to deliver as part of the HiSTEP program, which this is part of. Would anyone else like to go? We've got 3 folks in the room now.
Okay, so I'm Amari. I'm not a business owner, but I'm here to support and would learn so that I can support my clients. I'm from First Foundation back across the street. So I'm learning about all these different programs available so that I can assist. We have a lot of business clients. So that's why I'm here.
Thank you, Amari.
Great.
Aloha, my name is Jan Rumi. I am the Honorary Consul of Bangladesh and Morocco in Honolulu, Hawaii, and the past Dean of the Consular Corps of Hawaii. Many of our member consuls are very interested to know about Export Council as well as Export-Import Bank. I have been a senior manager at Grant Thornton Honolulu office for a long time. Since Grant Thornton left Hawaii about 20 years ago, I've become more of a businessman of my own. So I have a company which is called Connected Planet LLC. You probably know Frank Haas. Yeah, Frank Haas is a partner of mine. So we are trying to export goods and services to Asia Pacific, including South Asia. I'm originally from Bangladesh, American, and my dad is from India side. So I have so with this phase in my life, I'm very interested to know how we can help some of my clients and some of the honorary consuls or other consuls in the state of Hawaii to connect with their respective countries. Thank you.
Okay, great. Yep, thank you for taking. I've met you a few times in the past.
Yeah, thank you.
Oh, is there anyone else to introduce themselves? Okay, if there,
Just one more.
please.
This is the mic, correct?
That's right.
I just had to move. I didn't want to scream. So I'm Jackie. I'm from Diamond Bakery. So we are currently exporting to Japan our goods, but we do have some issues with ingredients and things that get really held up in customs, and they're very strict regulations of inspecting food. And ours are not perishable in the true sense, right? They're cookies and crackers, but we're just we're part of the HiSTEP program. So just learning more about the program in general, because I'm fairly new to that. But we have been exporting to Japan for several years.
Yeah, we know Diamond Bakery really well, and in fact, I'm excited when Diamond Bakery joins our programs, because you may not know this yet, but Diamond Bakery is an interesting company in that they've modified a lot of their recipes to be compliant with Japanese standards first, and then they sell those products in Hawaii so that the company recipes are allowed through Japanese customs and very easily. without, you know, the preservatives or anything that's banned in Japan. So that's actually quite interesting. So congratulations on that, and congratulations on your new job. And we look forward to working with you and helping
Thanks.
you export.
The struggle
Okay.
is real, though.
Oh, yeah.
Great to
For
have you.
sure. As today's event is expressly related to export finance, but you'll see very soon that one of the biggest problems your company might have and other companies in Hawaii have is the logistics and getting the product out to the world from Hawaii. That's where a lot of problems develop. But anyway, we have plenty of seminars on that subject too. So is there anybody else that would like to say hello?
That's everyone in the room, Rob.
Okay, great. If not, then I would invite, if you want to and you're not shy, I would invite any of our participants online to type into the chat function what you guys are working on and what you're trying to export. This is completely voluntary. You don't have to do that at all, but it might help our speakers address any particular issues that your specific company might have. So with that, let me jump in. I need to cover the disclaimer that this is being recorded. Eventually, it'll be edited a little bit and put up onto our YouTube channel. And as you can see, I brought up our YouTube channel here for the Hawaii Pacific Export Council. If you come to this channel and click on the videos link, you can see this long history of recorded events that we've done going back several years on many different topics. You can just see some of the ones that we've done very recently. Canada for export to Canada, export to Vietnam, working with American Chambers of Commerce in the U.S. Commercial Service. This one was island specific for our friends on Kauai, international trade shows. Every year, we have Export University 101. It's typically a 3 to 4 hour event where we cover lots of topics at a very high level. And then throughout the year, we get into a little bit more specifics like legal issues and intellectual property protection for exporters from Hawaii. Okay, so I invite you to please check there. As I said, this event that you're attending now will eventually be up on this YouTube channel, and I will also make the presentations from our speakers available as well. We see a quick question. Let me just answer this very briefly. Oh, thanks, Larry. I didn't know the chat was disabled. That's strange. Okay, thank you for typing it. If you want to type in anything, put it in the Q&A rather than the chat. All right, with that, let me jump in here. Our first speakers would be from DBEDT, and I'll cover this very briefly. And I'd like to thank DBEDT and SBA. We have one of our speakers today is from SBA, he's in California, but SBA has a big presence in Hawaii. And we'd like to thank them for the grant that we receive each year. SBA gives the STEP grant, or State Trade Expansion Program grant, to Hawaii. And in turn, DBEDT uses those funds to help Hawaii companies export. And to be clear, I think we have to define an export is sending a product or a service to a foreign market. An export is not to a neighbor island. It's not to the mainland. It's not even to Guam or Saipan, but it is to a foreign country such as Canada, Mexico, Japan, Germany, Brazil, and the like. Often I find when our Hawaii companies hear the word export, they automatically think of Japan. It's word association. When they hear the word export, they just think about Japan. And that's fine. There's plenty of cultural and historical and language reasons why we may want to export to Japan, but we start trying to tell our clients, let's think about some easier markets like Canada or Mexico first, and where we have free trade agreements. And you can cut your teeth on exporting in one of those markets first. However, we still see lots and lots of companies in Hawaii that are interested in Japan or other parts of Asia. And of course, we are ready, willing, and able to help them get involved in exporting to those markets. So back to our connection with DBEDT. DBEDT receives a STEP grant from SBA in Washington, D.C., and it's rebranded locally as HiSTEP. And that's what we have. And so the Hawaii Pacific Export Council gets a small piece of this HiSTEP grant every year. And we are able to put on these seminars, webinars, and then do lots of one-on-one company mentoring sessions. So just very briefly, I'll go through the HiSTEP program, DBEDT's HiSTEP program. Talk about there's 3 parts, as you can see here. Number 1 is the Export Readiness Program, or ERP. That's what our organization, the Hawaii Pacific Export Council, is focused on. The second is Hawaii Pavilions. That's where DBEDT buys space at international pavilions, different trade shows. Perhaps you're familiar with the Tokyo International Gift Show. That's an annual show that attracts something like 100,000 visitors. And there's quite a nice and large Hawaii pavilion. And Hawaii companies can get into that pavilion very inexpensively compared to buying that space on your own. So I strongly recommend that if you're just getting into exporting and trying to learn a little bit about it, get into that Hawaii pavilion at the Tokyo International Gift Show or the many other international trade shows that DBEDT takes part in. And it's a cheap and very effective way to get involved. And then there's a company assistance program where it's a sort of direct funding for specific activities that the company is interested in doing regarding exporting. There's some caveats involved in terms of the company has to have a minimum amount of income of US dollars, 200,000 per year, what have you, but they can request up to $10,000 to $15,000 annually. This company assistance is already done for the current cycle. We're coming up to the end of the 2023 cycle. It follows the federal government year, and we will on October 1st be kicking off the 2024 cycle. So if you're interested in any of these activities here, getting involved with company mentoring or attending our webinars, seminars, that's ERP, getting involved in next year's pavilions, some of which are agriculture related if you have agriculture products through the Hawaii Department of Agriculture, or if you meet the minimum requirements and you're applicable for company assistance, then you should start working on your business plan and your export plan now and getting ready to apply for those grants. Okay, so let's move on very quickly. Our first speaker is going to be Jim Newton. He's from SBA International. This is his website here, and he can explain much more about that. I'll bring up your presentation, Jim. Just bear with me a second.
Appreciate it.
And you're Jim. Are you in Irvine today?
Actually, I'm in Portland, Oregon.
Oh, that's right. You're in Portland. I'm sorry.
Yeah.
EXIM is in.
Exactly. Yeah. Greg's down in Irvine. Greg Moore,
Yeah.
who I used to work with at EXIM Bank when I was there. And I've been working with him out here because he covers Oregon for EXIM Bank.
Great. And we should also say that normally when we do this event, which we've been doing it annually, sometimes every other year, I think it's a great event that we should do annually to expose our Hawaii companies to these export financing options. But normally Mary Dale from SBA Honolulu would be here in this event, but she had a conflict today. She could not join us, but we do have lots of SBA staff in Hawaii who are versed on this topic and can speak to you locally. However, Jim is in a managerial role and he's based in Portland. So can you see your presentation here? I'm going to put it in presentation mode.
Appreciate it. Yeah, I can.
Yeah.
Thank you.
And just signal to me when you'd like me to switch the slide.
Okay, I'll just give a quick introduction for myself. I'm Jim Newton with SBA's Office of International Trade based in Portland. I have the good fortune of covering Oregon, Southwest Washington, Southern Idaho, Northern Nevada, Hawaii, and Guam, and the Northern Marianas. And so I have a lot of water in my territory. I am one of 20 international trade finance specialists across the country, delivering SBA's export loans exclusively. That's what we focus on. We certainly get involved with other issues and are quite willing to assist with SBA's other programs as needed. And I'll even make reference to one of those in my presentation. But primarily, we're working on gaining access to capital for small business exporters, because it's a challenge. And it's the reason why we offer the highest guarantee within SBA's total guarantee programs at a 90% level. It makes a difference. But I'll jump right into my presentation. If you could go ahead to the next slide, please. And what I want to illustrate here is that you really have an unusually good opportunity to be able to move into export markets, given 95% of consumers live outside of the U.S. and 98% of all U.S. exporters, believe it or not, are small businesses, at least by SBA's definition. And 33 1/3, or we'll just call it 1/3, of all U.S. exports are being delivered by small businesses in the U.S. And that consists of almost 10% of all small businesses are exporting by our calculation. Go ahead, please. What I want to be able to do today is impress upon you that SBA offers up solutions to export financing needs through 3 different programs. And what I'm trying to do today is really just make you aware of the options you have available to be able to utilize our guarantee programs, to go to a lender, bank or non-bank lender, to be able to get our support to get a loan in place. That's the key issue here for us, is being able to help you gain access to capital, specifically for export financing. And I might mention that our guarantee programs, and we're a subset of the larger SBA 7A loan guarantee programs. We're sort of the tail wagging the dog, because we're about $1 billion and the overall programs are more like 25 billion, but we're very important to those small business exporters that need our assistance. But just to say that our export loan guarantees are very similar to the other 7A loan programs. There's some nuances, and I'll try to address those as I go through my presentation. But the lenders providing SBA loans can certainly provide our export loans as well. As I mentioned a minute ago, we have the highest guarantee. Oh, excuse me, go ahead and stay with that slide just yet. We have the highest guarantee percentage available, mainly to attract lenders to export financing. Very flexible structuring with multiple use of proceeds. Delegated authority is available to lenders to be able to streamline and expedite the export loan process. And these are very competitive tools, as you'll see, for small business exporters. Go ahead, please. And we cover the whole cycle, the whole trade cycle, from expanding your base of business through the purchase of fixed assets to be able to meet whatever production needs you have, whether that's bottling or labeling or whatever changes you need to make to be able to satisfy the export requirements, just like Rob was mentioning a minute ago, as far as changing ingredients in baking goods to be able to meet the requirements in Japan. If you have to get rid of the preservatives, you have to get rid of the preservatives, and that can mean a change in your production line. But we also allow for the coverage of export market development costs. And I'll explain that more as it relates to one of our programs, where you can literally use funds from that program just like you use from the STEP grant program. It is a loan as opposed to a grant, but it accomplishes the same thing. And we certainly provide pre-shipment financing support, both in the form of working capital lines for pre-shipment purchases of goods or materials or labor costs, whatever necessary to produce and deliver your product overseas. And then standby letters of credit can also be done on a pre-shipment basis for bid bonds, performance bonds, advance payment guarantees, and I'll explain that also in detail, and post-shipment for accounts receivable financing. So the whole spectrum. Go ahead, if you would, to the next slide. Indirect exports are included under our program. And that's to say that any applicant / borrower who produces a product or service that's going to go into export channels, but through a third-party company in the U.S., is quite acceptable for the use of our program. And that includes if you are a manufacturer who happens to use an export trading company to deliver your goods overseas, or if you're a supplier within a domestic supply chain arrangement where you're providing components to another manufacturer who is putting that into their final product to be shipped overseas, as long as we can document that fact. And that applies to all three of our SBA International programs. Go ahead, please. On this, as far as certifying the indirect exports, it can be either as a written statement from your customer, that is to say, you supply a good or component to a particular buyer here in the U.S. They just need to document on their letterhead that they are putting that into a product that's or as a part of a service that's going overseas. We can also use a narrative from the borrower / indirect exporter about the nature of the goods and services that they are selling, and customers that they are selling to, and the foreign countries where these goods are ultimately going to be delivered. It does require approval through our Director of Trade Finance for OIT, but that can be readily done. Go ahead, please. These are the three programs that I'm alluding to. Export Express for export market development primarily, but for other purposes as well. International Trade Loan, and that's to expand your export capacity and develop your international competitive edge. And I'll try to explain that a little further. An Export Working Capital Program, which is to fulfill specific export orders. This is transactional financing at its best, and I think also our greatest value add. Go ahead, please. The first solution I'm going to offer up here is Export Express, which is our most streamlined program. Maximum loan amount $500,000 with a maximum guarantee of 90% on loans up to $350,000, and then 75% on loans above $350,000 to $500,000. The structure is either as a term loan or as a revolving letter of credit. Export development activity that can be financed with the Export Express loan, loan includes working capital to finance inventory and receivables and to cover costs of export market development, as I was mentioning, or even website optimization if needed. It can be used for standby letters of credit that are often required by foreign buyers. And I'll try and explain that a little bit further later in the presentation. Fixed asset purchases, equipment and real estate, and refinancing and acquisitions, as long as they're related to export growth. And in the use of the Export Express program, lender can use their own underwriting and collateral standards. That's why I say this is a very streamlined program delivered by lenders without our involvement. And literally, they're following our guidelines and then notifying us that the loan has been made. And so they therefore have delegated authority to act on our behalf, and up to 30% of the proceeds can be used for domestic purposes. Next slide, please. Oh, I meant to start a 20-minute timer when I got going here, but I didn't. So I'll have to try and keep an eye on myself.
Please don't worry about that, because this is
Okay.
really interesting and our companies need to hear this information.
All right, I'll stay with it here. In fact, I do want to open it up to questions as we go. I'll be glad to field them as I'm talking about these individual programs, or we can take on a general discussion, question and answer at the end. An example of an Export Express, this is a food manufacturer. Obviously, a lot of folks in the food manufacturing business in Hawaii. This particular company has annual revenues of $500,000. So you can see these are not mega companies. These are relatively small businesses. And we support companies of all sizes, I assure you. The orders they're receiving are various online retail sales to Australia and Europe. This, again, is just as an example of a particular company that we have financed. And the structure in this case, $300,000 line of credit with the 90% guarantee, since it's less than $350,000, could be a total loan, could be a maximum loan of $500,000. But in this case, $300,000, 5-year term, could be up to 7 years for general working capital, could be up to 10 years for equipment, and could be up to 25 years for the purchase of real estate. But again, in this example, 5-year term. And the collateral supporting this particular financing is a first lien on all business assets, AR, accounts receivable, and inventory acquired with the loan proceeds. So we have to have a first lien on the acquired assets with the proceeds, and we may have, or the lender has the option to utilize a second lien support on general assets as well. Use of proceeds, in this case, $200,000 to finance foreign AR and inventory purchases. That's to say that's both a pre and post shipment application. $100,000 for various working capital uses to revamp their company website, increase their international sales and marketing, and to attend a food trade show with support from HiSTEP, your state trade expansion program. So you can utilize these funds in conjunction with a HiSTEP grant. If you're going to a show, probably most of your costs are being met, at least on a shared basis with HiSTEP, to be able to attend the show. But if you intend to then travel in country to meet with foreign representatives or buyers, you can certainly use these proceeds for that purpose. Go ahead, please. This solution is as it relates to our international trade loan, which is an expanded version of the Export Express program, though it can't really be used for export market development. This is really intended more for purchase of fixed assets, both a plant and equipment, but can be used also for permanent working capital. Maximum loan amount is $5 million, maximum guarantee 90% across the board. And then if you're doing it for permanent working capital, the guarantee amount is limited to $4 million. So it effectively becomes an 80% guarantee instead of 90%, but that's kind of an exception. Structure, term loan only, no lines of credit, and there is no balloon or early repayment penalties. Standard 7A eligibility requirements, plus the loan proceeds will be used to expand an existing market, export market, or develop new export markets that the applicant can document as far as a business plan to do that. And I'm going to come back to that because I really want to emphasize the use of the export business plan. But this program can also be used by companies that are being adversely affected by foreign competition. So if that can be fully documented, and it's not, I have to admit, it's not often used for that purpose, but it certainly can be, and it has been. ITL will need to enhance your competitive position internationally. Not a matter of degree. We don't set a certain dollar amount or a certain percentage of improvement. We're just saying it needs to enhance your competitive position. And one of the key documents is the export business plan. We provide some guidelines on how those can be developed. And we certainly look to the SBDCs in the respective markets to be able to assist in that effort as well. And I'm sure that, your Export Trade Council could also be of assistance in that regard. But we do expect that a business plan that fully explains what the proceeds are going to be used for and how it's going to enhance your competitive position and build your export sales overseas. Go ahead to the next slide there, please.
Jim,
And this will
may I please interject with just one quick question? I
Sure,
wondered if
please
you
do.
might, would you mind explaining a bit about what exactly it means to say a loan guarantee in this context? Because you've mentioned that word quite a few times already in this presentation.
I apologize if you could restate that last part there.
Oh, I wondered if you could just maybe explain what exactly the word guarantee means in the context of this presentation.
Sure. No, glad to. I appreciate you bringing that up. I really should be more specific about that, and that is SBA does not make direct loans to individual borrowers except for disaster relief purposes. As far as our general loan guarantee programs, we are issuing a guarantee to the lender with the full faith and credit of the U.S. government for 90%, up to 90% of the loan amount. So we're trying to entice the lenders to provide you, the small business exporter, with the working capital or term loans you need to be able to compete overseas. We do not make those loans directly to you. So we're guaranteeing or offering a guarantee to the lender so that if by chance things don't work out, the sale doesn't get completed, the buyer is not able to pay, whatever the case, that's where our guarantee kicks in to assure the lender that they're going to be able to recoup up to 90% of the loan amount. In the case of the Export Express, it limits to 75% for loans over $350,000. But otherwise, we're saying we're covering 90% of the exposure assumed by the lender. That's the basis on which we feel they should be able to make this type of capital available to you, the small business exporter. Does that suffice, or?
It's extremely helpful. Thank you so much.
Certainly. Glad to mention that. Yeah, this is an example of the use of an international trade loan. It's a machine shop, annual revenues 2.1 million, so it's a little bit larger company, a little bit further along the curve, not a whole lot. They have received an order to provide seat brackets to the Boeing company. And that's quite prevalent here in the Northwest and elsewhere around the country. But the company's been a supplier for 8 years as an indirect exporter to Boeing. and the expansion was needed to fulfill an order for Boeing 737 work. The structure of this particular loan, $750,000, again, it could be up to $5 million, is to expand their facility and purchase new equipment with that loan. And again, it's a term loan financing only, no lines of credit. 10-year term, no balloon, no prepayment penalty. I want to emphasize that. Collateral, in this case, second lien on all business assets, which I alluded to earlier, second deed of trust on commercial property, and a first lien on the new business equipment that's purchased with the loan proceeds. We do require that. And then finally, the use of proceeds in this case, $200,000 is being used to add additional warehouse space to their existing facility, expanding their total production capacity, and $550,000 to purchase new manufacturing equipment for this specific order. Any questions on that count as far as how that can be used? If not, that's okay. I mean, I just wanted to put it out there. I think examples help to be able to illustrate how these programs can benefit you. There are a lot of different circumstances, but just want to give a few examples. Go
Jim,
ahead, please.
with loans like these that you've mentioned just now, like this last example and the one prior, are the interest rates determined by the actual lender on a situational basis?
They are. The lender negotiates with the borrower for the rate. We set a cap on what that rate can be. It gets into some level of detail on the various programs and the various circumstances and dollar amount of the loan, et cetera. But we do put a cap on it for all of our programs, except for the last one that I'm going to address here, the Export Working Capital Program, where we feel that it is sufficiently challenging for the lenders to fully utilize this next program, that we actually don't put a cap on it. It has to be, quote, reasonable. That's kind of a to be determined term, but in all the other cases, our programs or other 7A programs, there is a cap on what that interest rate can be. And but I'm not going to try and launch into all of the specific cases.
Sure.
Go ahead, please.
There's a question that came in. Can the financing be used for leased space and equipment?
It can. There has to be a landlord waiver provided so that the landlord isn't going to preempt your ability to either produce the goods or repay the loan. But often cases, or in many cases, the property of the manufacturer or wholesaler or whatever type of business is part of the total collateral base, but it's not an absolute. It can be leased property. We just would have to have a landlord's waiver to put the loan in place.
Okay, thank you. There's another question that came in. Do you have a list of the top 3 to 5 banks that know the SBA International loan programs and you work well with smoothly and quickly to move through the loan process? And do you know that? And do you know what the interest rate cap is currently?
Yeah, I will first address the lenders, and I'll try and address the cap to give you an indication. As far as lenders, bear with me a second. I've got something flashing on my screen here. I'm going to dismiss. It's telling me I've got another presentation coming up. We'll not be concerned about that right now. The lenders include banks and non-banks. The banks are all the way from the smaller community banks to the regional and super regional banks to the national or even international banks. So our largest active participant in the export programs at SBA is Citibank. I don't know if Citi is active in Hawaii. I don't believe so, but
No.
I didn't think so. But amongst the Hawaiian banks, I would have to say that CPB is probably the most active user of the SBA loan programs in Hawaii. They are definitely knowledgeable about the export programs, and I have discussed various possible loan arrangements with them in the past. But I will say they are a good candidate. There's actually quite a number who were attending the recent lenders conference there in Honolulu that I was speaking at, and who expressed interest. I just will have to say that their focus has been more on the domestic programs than the export programs. But it's something that we can engage them on pretty readily, and I'm quite willing to get on the line with them to be able to discuss individual export lending opportunities and the nature of how our application or our programs could apply.
I have to give a plug to one of our new board members on the Hawaii Pacific Export Council. Is from CPB, and I know that they are working on building out their programs this way. Oh, she just typed it in here. Susan Utsugi from CPB. So they're working on this aggressively, and I would start there and then go on. And then also one of our attendees who was live in the audience, she mentioned at the beginning that maybe her bank is getting involved in this. I don't know if she wants to comment on that or not. Okay.
Yeah, I'll go ahead and mention some of the banks that I did speak with during the conference, such as First Hawaiian Bank and Bank of excuse me. Hope I get this right. Bank of Hawaii? No, Hawaii.
Yeah, no, Bank of Hawaii, and there's also First Hawaiian and Hawaii National Bank.
Yep. Yeah, and the non-bank lenders were there as well. Byline Bank is certainly one of the active players, along with other, shall we say, online banks. They get involved primarily in this particular program, the international trade loan, because it's a term asset for them and one that they can actually sell into the secondary market if they choose. And that is a nice premium for them because you got U.S. government credit on a 10-year term at a relatively, or shall we say, at a more attractive rate than treasuries.
Sure.
So something that they tend to pursue. Let me go ahead and jump in. Oh, excuse me. I'm sorry. The cap, the rate cap. Typically, again, it varies by loan size and circumstances, but on the high side, it would be prime plus 3.5% as a rate cap. And typically, the lenders are making these loans available at a rate less than the cap. We just put it in there in case someone's getting too greedy. But this is intended to be a benefit to small business exporters to gain access to capital, and we don't want to make it prohibitively costly that they can't afford to carry out the export. So that's what we're promoting to the lenders. They get the benefit of our 90% guarantee to justify making it a more affordable loan for you. That's an indication as for a loan of this nature. Go ahead with the EWCP, if you would, please. That's the last program of the three.
Okay.
Unless there's another question.
Can these loans be used for refi?
They actually can. It has to establish a 10% improvement in the cash flow of the borrower. So I mean, it's got to be justified by sufficient improvement in their overall cash flow. And I'll say where it often comes into play is if you've got a buyout that's occurred that was done with non-bank financed funding, this could be used to replace that debt at a more reasonable rate. But it does include refi. Go ahead, though, if you would. I'm going to jump into this last program because to me, this is the one that has the greatest value added for small business exporters. This is called the Export Working Capital. Oh, excuse me, we jumped one slide ahead there. There we go. Yeah, the Export Working Capital Program, alias the EWCP. Maximum loan amount $5 million, maximum guarantee 90%. And the structure is typically either an asset-based line of credit or a transaction-based line of credit. And I'll try and explain that a little further. Though the program can also be used for a single or straight line of credit for a given project, or it can be used for multiple export transaction on a revolving basis. When I refer to the transaction-based line, what I'm alluding to is the use of advances against the face value of an underlying export purchase order or contract or letter of credit. Or it could even be documents against payment. So documentary collections, basically. But it's intended to give more front-end capital to the borrower. So for a smaller company that has a incrementally larger opportunity to export, but doesn't have the existing asset pool of inventory and receivables to support an asset-based line, the transaction-based line may well be the answer. It's a little bit more of a challenge for the lenders because they tend to favor the more conventional ABL approach, but a transaction-based line, in our case, in our opinion, provides a lot more capacity for that small business exporter to actually carry out that piece of business, and it allows for advances up to 90% of the face value of that underlying order. If it's a function, though, of the cost of goods sold to deliver that product or service. And in this particular case, non-PLP lenders, which most EWCP lenders are non-PLP, unless they have been approved specifically for that program for the PLP. I get involved, or any of my colleagues within OIT who are serving as export finance managers actually get involved in underwriting these loans alongside of the lender. And that's why we have come to SBA from various backgrounds in international trade finance. I happen to have run a program for California at an earlier day called the California Export Finance Program. And I was with EXIM prior to joining SBA, doing essentially the same thing I am now here in Portland. But it's, but I got to come back to the West Coast. But it's closer to Hawaii. It is unusual for that type of involvement. That's not applicable to any other SBA program. We hope that we can actually introduce it for the Capline program as well. We're working with Capital Access at SBA now to be able to do that. But for now, this is the only program that involves underwriting on behalf of SBA alongside the lender. And then the SBA fee for these transactions for the EWCP, 1/4 of 1% for up to 12 months. Actually, this is true of any SBA loan. If you're going to put it in place for just 12 months or less, then it's only going to cost you 1/4 of 1% to use that guarantee, in this case, 90% guarantee. If you want to go out to 2 years, 52.5 basis points for out to 24 months and 80 basis points for 36 months. And this was an exception that was afforded to Office of International Trade by Capital Access because of the low loss history on the Export Working Capital Program. When you look at it, these are basically self-liquidating loans. They get repaid from performance of the transaction. go ahead to the next slide and I'll give you an example of how the EWCP can be used. In this case, an agricultural services firm, 4.2 million in annual revenues. They had 60-day open account sales to agricultural companies in Argentina and Brazil. This happens to have been supported by EXIM Bank through their export credit insurance program. What's in this particular case, what's called the Express Insurance Policy, which is typically used by new to export small businesses. In fact, I like to use this example, so it leads into Greg's comments, but I'm going to guess he somehow didn't get access to Zoom this morning. Maybe he's out there, but we won't have a chance to.
Greg's online.
Oh, he
he's
is
on the
online.
phone.
Great. Okay. Well,
he dialed in. He's going to speak next.
Oh, okay. I apologize. I was filling up the hour, and I'm sorry. I didn't realize that Greg was ready to go. Yeah, I'll just say this is the programs that Greg will be speaking to. We most often require it on open account sales unless it's a major corporate on the other side or possibly a sovereign credit. Or special circumstances. Anyway, in this case, the structure, EWCP, this happens to be an asset-based line instead of a transaction line. It's done as a revolving line of credit with the 90% guarantee. Loan amount, $500,000, could go up to $5 million. SBA fee, as I mentioned, 1/4 of 1%, $1,125. Use of proceeds, post-shipment working capital in this case, because this is carrying receivables for these 60-day open account sales. And then collateral is a first lien on all foreign AR at a 90% advance rate because they are insured receivables through EXIM Bank. Export inventory, no advance, because again, strictly post-shipment type of financing, though the allowable on inventory is 75% for both raw materials, work in process, and finished goods if it were applicable. And I'm going to stop with that. I've got a couple of other examples of EWCP, but I won't get into that so I can conserve some time here for Greg to be able to speak about export credit insurance and EXIM in general. I'll just say these other examples highlight how they can be used for letters, standby letters of credit, as bid bonds, performance bonds, and advance payment guarantees. And presumably this will be distributed, so you'll have a chance to take a look at that. But thank you very much for listening. Glad to have this opportunity to speak to you all.
Thanks very much, Jim. That's great. Are there any final questions for Jim? I'm getting a message now that Greg says he can hear us, but he cannot speak into the.
I was having the same problem at the outset until I spoke, and it somehow came across. Zoom's magic.
Okay. Let me just bring up Greg's presentation, and I'd also like to introduce very briefly. Greg Moore is from the Export-Import Bank of the United States, often just called EXIM. He's in California, and then locally we have actually where the event is live today is at the Foreign Trade Zone down at Pier 2 in Honolulu, and the Foreign Trade Zone represents EXIM locally in Hawaii, and we have Tsurumi Hamasu from the Foreign Trade Zone. She's there. She's at the Foreign Trade Zone, but she's over in kind of the headquarters building as you came in. It's just off to the left there. And so I wanted everybody to see her because she's a very nice person, but she's able to help when or if you can't find Greg. Okay, let's see.
I apologize. I'm going to have to step offline. I wish I could field any other questions. Be glad to do so if you want to send me a note, either by email or phone.
Great. Thanks so much, Jim. We greatly appreciate having you here. Thanks.
Absolutely. My pleasure. Thank you.
Sure. Okay. Greg, can you try speaking, and if not, I'll give a brief overview.
He's on
and
mute. He's
I-
on mute.
I know I tried, I've unmuted him.
And I think he's got two phones, so maybe if he hangs up one of them.
I'm not sure. But if not, I can give a little brief overview of EXIM, and one of the reasons that I very much like to have EXIM participate. Let's see. All right, let me just jump in here. As I said, this is, and maybe Greg will join us briefly, but the Export-Import Bank of the United States, every few years you hear a big rigmarole going on in Washington about whether or not EXIM should be refunded. And I think it's kind of a silly discussion because it's such a valuable asset for our companies who do cross-border transactions, and for the exporters in particular that I deal with, it's great to have EXIM behind you, particularly when it comes to the credit insurance, which we'll talk about in a second. So you can see here the first time it was funded and set up by Congress was in 1934. The offices here, what we deal with primarily from Hawaii is Orange County, and Greg is based in Irvine. And then, of course, locally in Hawaii, you have the Foreign Trade Zone in Tsurumi. So what's the main point of EXIM? It's minimizing risk, which really is the job of any chief financial officer, but that's what you're trying to do. Level the playing field with foreign competitors, and then add on to or supplement your traditional commercial financing, which we just heard about some of that from Jim from SBA, but also if you didn't use SBA and went for loans otherwise, EXIM can back you up. So where they can work on pre-export financing with the working capital guarantee, and then post-export financing with insurance. And this is where a lot of my clients who I help support selling their products globally, we use a lot of the EXIM insurance. So I'll just skip the primary parts that I think our Hawaii audience is mostly interested in will be in the red, and the risk protection for the insurance that you can get from EXIM is fantastic, and it helps you. So for example,
can you hear me, Rob?
Oh yeah, we can hear you, Greg. It's great to hear your voice.
It's something that they just did something. I'm sorry, that was a great presentation though. You pretty much covered it. And I'm sorry, I can't see the slides in front of me. My computer isn't working today, so it's been a terrible day.
Oh, sure.
But,
well, where we are is at EXIM Bank support, and we're just talking about risk protection. And I'll just have a couple comments, and then I'll jump to the next slide, and I'll tell you what the slide is. And if you have any comments on that slide, you can do that. So typically where my customers are using the EXIM insurance, the credit insurance, is for well, almost any international transaction, but particularly if you're not very familiar with the company that you're selling product to, and you ask that company to fill out a very simple credit history, basically with some details about the company and the ownership and the revenues for the past few years, and then one of your EXIM agents will get in the middle and process that credit report, and then tell you how much credit insurance you're able to get. And I've typically found that it's pretty straightforward to get $50,000 to $100,000 of credit insurance from companies all over the world in places as far-reaching as Pakistan and Sri Lanka, Africa, places that we traditionally might not do business with and might not know very well. But of course, you can get credit insurance for Japan, for Germany, for Canada, wherever. And it's really fantastic. It's very cheap credit insurance, and it protects you in case of non-payment from the client for a variety of reasons. And Greg can elucidate that a little bit more.
Yeah,
Let's
it's
see.
basically, as you point out, Rob, a payment default insurance when you're exporting, when your buyer is a non-American buyer, and the buyer credit limits can be determined if you apply for an insurance policy with us and you name the buyer to the policy. We can assess with you what the buyer credit limit should be. In other words, the maximum amount they're going to owe you at any one time during the 12 or within the 12-month policy period. So on an application form, you might say, you might spell out where the buyer is, the contact information, and all of that, and the buyer credit limit you're seeking for them. In other words, they may say they owe you, they're going to owe you a maximum of $100,000 within the 12-month policy period. And our underwriters might come back and say, we're only comfortable with $50,000 or what have you, or we approve the $100,000. And that way you'll know how much credit you can extend to them and for how many dates, because you'd also apply for 30-day or 60-day or 90-day terms after you ship. Just what are the payment terms you're willing to extend to your buyer? I should mention that if you project the buyer is going to owe you more than $500,000 at any one time within the 12-month period, we're going to have to see they don't have to be audited, but we're going to have to see their financial statements, their balance sheet and income statement, okay? And if let's say they're going to owe you less than $100,000 at any one time, well, all we need then is a third-party trade reference or your ledger sheet showing us if you have any payment history already with the buyer. You can show us on a ledger sheet when they made payment, when you shipped, et cetera, to see if they've been fairly prompt with payment. And again, that's for buyer credit limits of less than $100,000. And if it's between $100,000 and $500,000, we will need a credit report issued by one of the international credit agencies like Dun & Bradstreet, in addition to the third-party trade reference. And again, it's only if the amount exceeds $500,000 that we'll need to see the buyer's financial statements as well. Rob is right. We do insure buyers all over the world. We have something on our website called a country limitation schedule, which will show you whether there are countries, and there are countries where we will not support sales if the buyer resides in that country. For example, both Ukraine and Russia are off right now, as is Argentina. But we do support sales to something like 185 countries around the world on all continents. We're very active in Africa and Southeast Asia and so forth, supporting sales to buyers in those countries. Now, this is a short-term program, the export credit insurance. It's when you have payment terms with your buyer of less than 360 days, typically of less than 180 days, because the further out you go with your payment terms, the riskier the transaction inherently becomes. And if you're new to EXIM underwriters might be reluctant to extend, say, long payment terms. You're better off starting with 30 or 60 or 90-day terms with your foreign buyer and applying for that, I would suggest. Premium rate, or the cost of our We have a multi-buyer policy where you can insure multiple buyers under the same policy. The cost of that is 65 basis points for 1 to 60-day payment terms. So let's say you're extending 60-day payment terms to someone overseas, and it's a $10,000 invoice. Well, you take 10,000 and multiply that by 0.0065 equals $65. So on a $10,000 invoice with no down payment, it would cost you $65 to transfer 95%, or in this case, $9,500 of your payment risk over to the EXIM bank. And again, why is there payment risk? Because you're selling on open account payment terms. In other words, you're shipping product or you're delivering your service, excuse me, before you get paid, which ordinarily might be a very risky thing to do, and that's why we're here. We encourage you to increase your export sales by extending payment terms when appropriate to your overseas buyer. And I would be the first to recommend that you don't sell on open account the very first time you're exporting to an overseas buyer. You should start with cash in advance or letters of credit, or some payment mechanism like cash against documents that does not involve the EXIM bank, and then eventually transition, especially if it's a recurring buyer like a distributor or a retailer who's going to come back to you from time to time with orders. After the first couple of orders, I would say you should transition to open account payment terms, or at least in part. You can still put a down payment and ensure the balance if you're extending terms on the balance, and until you eventually are comfortable enough extending terms for the full amount of the invoice. And with recurring buyers like distributors and retailers, that is the best way you can unilaterally encourage your buyers to buy more from you, is to more closely align the time that they pay you, their supplier, with the time they get paid by their customers, right? So their cash flow is not out of whack, especially if it's a smaller buyer, and you're helping them. You come across as a hero. I should mention that we do not contact your buyer under any circumstances during the application process or while you have the policy, unless you have to file a claim, which is what the export credit insurance is there for. It's to enable you to file a claim in a payment default situation. So when you essentially have a bad debt you think you're ready to write off, then you file a claim with us and get reimbursed under most of our policies for 95% of what that buyer owed you. Rob, am I making sense? I'm not seeing any slides. I hope I'm making some sense.
Yeah, perfectly. So right now we're on the slide called eligibility requirements, and it's talking about exporters must be in business at least 3 years, have a DUNS number, et cetera.
Yeah, and I would say the most, because being in business for 3 years, yeah, that's going to be a requirement for some of our policies. For other policies, like our Express Insurance policy, which is really designed for companies that are new to exporting with payment terms, in other words, while extending credit to foreign buyers, we can make exceptions to that 3 years of operating history if that doesn't exist. What we will want to see, though, is some experience exporting and some operating history, so that the business has, the exporter that is, has some financial highlights that they can refer to in the application form. But I can help people get through the application form, fill it out, refer to a broker who would represent you subsequently in a claim situation should that arise. Hopefully you take out the insurance as the exporter and never have to file a claim, right? Because you're still doing the credit management on your buyers. The idea is not to not know your buyers and then just insure them. You want to know if they're of good character, sound character, if they know what they're doing, if they have some financial means. Rob, you correctly pointed out the insurance is beneficial when the customer or the buyer is relatively new to you. But to be honest with you, and I certainly have a certain bias in this, I think it's advisable to insure any export sales simply because there are things that happen that no one, even the buyer with the very best of intentions, that could prevent them from making payment to you.
I agree with you wholeheartedly. Absolutely. We should be using this EXIM facility for nearly every export, but please go ahead.
Now that's my bias. A lot of people say, well, I've been doing business with this guy in London for 30 years. Nothing's ever going to happen. Okay, and I hope you're right if you're not insuring those sales. I certainly hope you're right. You're probably right, that nothing will ever happen. But what if suddenly, let's say they're a small to medium-sized distributor, and suddenly their bank lender withholds their credit line from them? Or if you haven't looked at their receivables portfolio, let's say they have a concentration of customers, and suddenly one or two of their largest customers stop paying them. Let's say your buyer's in Mexico and suddenly the Mexican peso depreciates against the dollar so much after you ship that your dollar-denominated invoice, they can no longer pay it, right? The insurance protects you against all of those things. I'll cite another example where you'd say, well, there's no way anybody's insuring this or this can't happen. Years ago, and I always bring them up without naming them. So, Rob, if you've heard this story before, forgive me. I had a customer in LA who was a grain wholesaler. They purchased grain from Nebraska and resold it to their customers in China. And during one shipment, and this was a small exporter, during one shipment, while the grain was on the boat in the ocean, Chinese customs officials suddenly erected a quota against the importation of that particular strain of grain into the country. I don't know what their reason was, but they did. And that prevented the buyer from getting the grain through customs. And so the buyer obviously couldn't pay for the grain, leaving the exporter without any money and having a heck of a time trying to redirect the shipment to find a buyer in short order at, say, a steep discount. I don't think they ever actually succeeded in doing that. They didn't have the insurance at the time. They called me to see how they might get paid. And, I said, well, try diplomatic circles or what have you. But that was an example of a political risk factor that caused the buyer in China to be unable to access the grain and therefore unable to pay for it. So our insurance covers any commercial, financial, regulatory, or political risk factor that would prevent the buyer from paying. What it does not cover, and I want to point this out, is something called product dispute. If the buyer ordered apples and you, the exporter, sent them oranges and they don't want your oranges and don't want to pay for them, we, the insurance carrier, do not want to get in the middle of that. In other words, in product dispute situations, we expect you to resolve that with your buyer amongst yourselves, because there is a possibility that the buyer might be right, that you, the exporter, did not fulfill the terms and conditions of their PO or your sales agreement with them. And as the insurance carrier, we don't want to get in the middle of that. What we want to get in the middle of are situations where your buyer is unable to pay you for any political or commercial risk factor, if that makes sense. Oh, Rob, are we still there? Rob?
Yes, I'm here. Yes.
Okay. I'll just mention one thing. because we're a U.S. federal government agency, the product you're selling or the service you're providing as the exporter has to have at least 50% U.S. content. And then we will insure or support the entire order. But I wanted to point that out as well.
Sure, but I think that's common across all of these government programs, including the DBEDT programs for HiSTEP and what have you, that they have to be 51% US based. Of course, if it's a product from Hawaii, it's US based. So, but yes, 50% US content, including labor and excluding markup on a cost basis. So,
right.
Let's see if there's any. We covered commercial risk, political risk. There's a short-term export credit limit coverage parameters. Do you have anything to mention here?
Just that for any of our multi-buyer policies, we cover 95% of your payment exposure. For our single buyer policy, we cover only 90% of your payment exposure, okay? A single buyer policy is where you're taking out an insurance policy to protect payments for one buyer only. And that policy happens to have the highest premium rate because all of our risk as the underwriter is focused or concentrated with that one buyer. In other words, there's no diversification of risk. So that's going to be the most expensive policy with the least amount of payment protection coverage. So why do people take out the single buyer? It's for flexibility reasons. Let's say they only want to insure one or two buyers and not their whole portfolio of buyers, or let's say they only have one or two foreign buyers and they just prefer to insure those buyers. So we have a single buyer policy to give exporters the maximum amount of flexibility as to who they want to insure versus who they do not want to insure.
Understood. And Greg, are there any payment mechanisms that are not covered? For example, here you have under lender policies with bank letters of credit. Is there anything that is not possible to use EXIM credit insurance with?
Well, if you have a confirmed letter of credit, let's say your foreign buyer issues a letter of credit in your favor and you've got a bank in Hawaii or on the mainland for that matter that is willing to confirm that letter of credit, then you don't have any payment risk because it's basically domestic bank credit risk. So if your bank is the Bank of Hawaii, that's pretty sound credit risk and you don't need EXIM Bank protection for that particular sale. But for just about, and obviously cash in advance, there's nothing to insure because you got paid before you even tipped, right? But everything else, even cash against documents, we do provide insurance for cash against document sales, and I'll explain that if you want me to, but that's very low risk, and hence it comes with a very low premium. And unconfirmed letters of credit, let's say you don't have a U.S. bank confirming the foreign LC, we'll insure that letter of credit, and that can be beneficial when you're importing potentially, from a financially, questionable, I don't want to say questionable, but if credit, country risk is not great, then an unconfirmed letter of credit, say a letter of credit issued by an Algerian bank or a Vietnamese bank or a Tunisian bank, okay, and that a U.S. bank is unwilling to confirm, then we can insure the letter of credit against payment default. And as you know, a letter of credit is a legal obligation on the part of the issuing bank to make payment when the supplier has provided them with collection documents evidencing that the shipment took place, right? But So the only reason a bank would not make payment under a letter of credit that it has issued is if that bank becomes insolvent. But if you're dealing with a bank in Vietnam or Algeria or Pakistan or a country like that, there's a possibility of that. So you might, and if your bank is not willing to confirm that letter of credit, like this payment default, you can turn to us to possibly have us insure it. And that way they'll confirm it. If it's insured by the government, they'll confirm the LC. Rob, I hope I answered your question.
Yes, perfectly. Thank you. Okay. There's I think we're almost done with this, but I'd like you to just very briefly suggest for a small Hawaii company who's just getting involved and they've never really heard of EXIM or wasn't sure what it does, and they think, hey, I'd be interested in insuring my next shipment to Japan. What do they do? What's the next step? How do they proceed from there?
Well, they would call you or me, because the first step would be for me to review the policy parameters of each of our 4 trade insurance policies. And I would start in talking to them about what they're doing, how much they're exporting to how many foreign buyers, if at all, right?
Yeah.
And it's just what they're trying to do so that I can suggest which trade insurance policy of ours might best suit them. And then once I've done that, or I and the exporter have done that together over the phone, then I can review the insurance application form for that particular policy over the phone with them and essentially help the exporter fill out our application form. At that point, a broker will contact one of our EXIM licensed brokers, will contact the exporter to help them through then with the application process to see to it that it gets to our underwriters in DC. In other words, they're going to take a hard copy of the application and convert it into electronic format and submit that to our underwriters in Washington, D.C. And it will take our underwriters a couple to 3 weeks to make an approval decision on the application. I want to mention there's no application fee or no advance premium that we call for, so it's free to apply. All that's required is the time and effort on the part of the exporter to fill out the form. And after the exporter applies, the broker will want to help them set up an electronic account on EXIM Online, because after I provide the pricing and the parameters of the policy to the exporter over the phone, that's just a phone conversation. They're going to get a written quotation from us stating basically what I've already told them, okay? And then they can either accept our quote or not accept our quote online through their electronic account. That's how you get, it's really very easy.
Yeah, I've been through the process countless times, and it's not complicated. Like anything, the first time you do it, there's a small learning curve, but after you do it once, it's very simple and straightforward, and especially if you deal with the same broker all the time. Greg, do you know, are there any brokers in Hawaii?
We do not have an EXIM licensed broker in Hawaii, unfortunately.
I can't hear you.
Oh, can you hear me now?
Yeah, I can hear you.
Can you hear me now? Okay.
Yes.
We do not have a licensed broker in Hawaii, unfortunately, but we can refer a broker to the exporter. And we would do that on a rotating basis. We take a set of our most experienced brokers, and then on a rotating basis, have one of those brokers contact the exporter in Hawaii.
Okay, and there's no fee. There's no fee to the broker, right? The Hawaii company just pays for the insurance
fee. That's right. What we do is, the exporter pays us premiums after they ship, right? Depending on the dollar amount of their shipment. Remember my example with the $10,000 invoice and times 0.0065 equals $65. So out of that $65, we would pay the broker their commission, which would not be a great deal of money, but if someday it's $1 million invoice. In other words, we pay the brokers their commissions through the insurance premium payments the exporter pays to us.
Okay, great. And I don't think there's a hard and fast rule, but just from your experience, what is the size of the export in dollar terms where it is relevant to look for this kind of credit insurance? I mean, let's say you're just shipping, $250 worth of skin cream from Hawaii to Tokyo. I don't think it's worth it to get involved at that point. But is there some dollar value where you think that this kind of credit insurance is most applicable?
Rob, technically, there's no minimum or maximum amount we will insure under any of our trade insurance policies. However, you're quite right. For a $250 sale, or I would venture to say for any sale less than $10,000, you can insure that sale with us. There's nothing preventing you from doing it. But I would say as a practical matter, for less than $10,000, just get a credit card payment, something like that. It would be a lot easier and a lot less time consuming.
Yeah, okay. That's kind of my experience too.
If you want for a $5,000 sale, you can do that.
Yeah, it's just that there are some places where our companies could ship products to where the buyer may not have credit cards or have access to credit cards and what have you. So even at $5,000 level of a sale, I think it's still worth it to approach EXIM and get a quote on the credit insurance. Because many of our companies are small, and a $10,000 order could be quite sizable for them. And so even 5,000 could be very interesting. Okay, so Greg, I have the slide up here with your contact information, and I'll make sure that I send the presentation around to everybody who has joined today in person or on Zoom, so that they have your telephone number and email address, and that you're in California. So this is right now 3 hours ahead. Soon it'll just be 2 hours ahead of Hawaii. And you can call Greg anytime or send him an email. I contact him often, and he's extremely responsive, and we'll get back to you very quickly. And he's only here to help you. And I strongly suggest using EXIM more for that. So we're a little over time, Greg, so I'm just going to finish and wrap it up here. And if anybody has questions, they can email you or contact you directly. So with that, I'd like to say thank you to DBEDT and SBA for the grant that we received that allows us to put these programs on. Thanks to Jamie Lum, she's the manager at DBEDT. Thanks to Jim Newton from SBA for joining us from Oregon. Of course, Greg Moore, who's on the line from California, from EXIM, Tsurumi Hamasu at the Foreign Trade Zone down at Pier 2. Thanks also to my colleague from the Hawaii Pacific Export Council, Neil Rath, for being in person today when I could not be down there at the Foreign Trade Zone and helping with the information technology, getting the Zoom up on the screen and the audio there. I greatly appreciate Neil's help. So with that, I'll sign off. This is Rob Haak from the Hawaii Pacific Exports Council. Again, look for emails coming from me soon with PDFs of the presentations attached, and also check in about a week on our YouTube channel for an edited version of this video. And thanks so much for attending. We look forward to seeing you soon in the 2024 cycle of HiSTEP. Have a wonderful rest of your day. Mahalo.
Thanks so much, Rob.
Thanks. Thank you, everyone.